Good afternoon, everyone. Thank you for joining us today, the Property Club's Investor Series on 128 Waterloo. My name is Jackie Hill, and I'm a partner here at the Property Club. Joining me today is Alex Karcheski, one of our agents, absolutely an industry expert, lots of great information to share with you. Susan Legg, she is former editor-in-chief of a large publishing company and neighborhood expert. We're going to start off today's seminar just talking about investments as a whole and the top 3 ways that you can make money in real estate. Alex, do you want to go through our scenarios?
Sure, thank you, Jackie. So basically, we take a look at the three investment opportunities that make up any solid real estate investment. Very simply, it's broken down into 3 steps, one being passive appreciation. Passive appreciation is the general year-over-year growth of the market in itself. So if you're looking at a property in Toronto or the Greater Toronto Area or Kitchener-Waterloo, you could expect a return of about 5% on a year-over-year basis. Now, over the past year, we saw actually a 24% return on the condo market in the GTA. So that's kind of the numbers that we're targeting long term. The second being cash flow. Cash flow, very simply, is rental income versus expenses. Now, you can calculate that on a yearly basis, a monthly basis, semi-annual, whatever really suits you and your accounting and your financial team's goals. And lastly, number 3 is debt repayment. Debt repayment is a look at the relationship between principal and interest and the payment schedule and the amounts you're paying off year over year. Long term, you pay off more principal than you do interest, but at the front end, you typically have higher interest payments coming off your mortgage. And we also take a look at how you can leverage your mortgages, the equity in your property, refinance them, pull out money, and look at purchasing additional properties to add to your wealth portfolio. These are all topics in themselves that could have hour or 2 hour conversations. So really, this is more of a principle that we like to propose to everybody, and we definitely encourage you to reach out to us to get some more explanation on each of these.
Thank you, Alex. Just before we get into the details around 128, I want to talk to you just a little bit about the Property Club and what we do. One of the key benefits to joining the club is VIP Platinum access, getting in before the general public, getting information before the general public on floor plans and pricing. We as a group have a very, very deep knowledge of the market. We all are personal investors, so we ourselves have done it a couple of times. We want to talk to you and give you more context, maybe a little more information around the neighborhood itself, what that looks and feels like. And we also have access to other fellow investors and experts within the field. Let's start off by just talking about how you build your wealth portfolio.
Thanks, Jackie. So wealth portfolio is very simple to understand. It's like playing Monopoly. You really do want to accumulate as many properties as possible. We like to set a general goal for each of our clients. Obviously, based on financial situations, that goal will differ. A good place to start is to try and add at least one property every year. If that's not feasible, try doing that at first every 2 years, 3 years, whatever really can work for you. With every property that you do add on as well to your portfolio, please do understand that it actually does become easier to gain the next property. That really comes off of some of the principles that we introduced a couple slides ago, where you look at your cash flows as well as your ability to refinance properties through the debt repayment cycle. Next, I'll go over an explanation of how this could also apply to new condos. So part of our investment philosophy is purchasing units or having our clients purchase units when a project goes into platinum sales. Platinum sales effectively mean the project is in its initial public offering. So we usually, as a brokerage, have access to these projects, and day one pricing is always the lowest. To give you an example, we took a made-up unit of about $400,000 as a purchase price. If you purchase that unit day one platinum sale, let's just say you purchase it for $400,000. Within 7 to 10 days, the next phase of sales would begin, and that is the VIP broker sales. At that point, you're looking at a $415,000 purchase price for that initial $400,000 unit you've purchased. 60 days following platinum, you'd be looking at a public offering. So this is the initial grand opening for the general public. At that price point, you're looking at basically the same unit costing from $400,000 to $425,000. And lastly, if you were to wait for your purchase all the way into the inventory phase, which is usually 3 years, You'd be looking at purchasing the unit from the developer at $470,000. So these numbers are all conservative, and they're really more for illustration purposes to show the value of purchasing a unit in day one, as opposed to waiting as the building goes through its sales cycle. Next, I'll take a little bit of a deeper dive into some of our case studies with our successful clients. This is just a selection of some of the many that have had amazing successes. First, we'll take a look at Alan. Alan purchased a 2-bedroom, 2-bath condo at our Parkside Village community. He purchased in Tower PSV2, which is actually the 5th tower that went for sale, 6th tower that went for sale in the development. Alan purchased a unit in July of 2012. He purchased it for just over $350,000. Alan's strategy into this purchase was to actually hold on to the unit and rent it out, use it as a cash flow property. So when he came to close on the unit in late 2017, the unit was leasing out for about $2,300 a month. Alan obviously chose to lease the unit, but he also took a look at the resale values for the same type of unit in the building, which were going for about $520,000 a unit. So Alan has a built-in equity of approximately $170,000 on top of the deposits he's paid into the unit to use for potential future purchases, releveraging. Next, we take a look at Trevor's investment. Trevor purchased himself a unit, a livable unit effectively, of just under 1,200 square feet, 2-bedroom plus den layout, 2.5 baths, beautiful outdoor space. He purchased one of the better units within the project with the eye of the neighborhood growing long term. Alan's he purchased the unit 2012 for $462,000. When he went to resell the unit 5 years later, he actually made well over $300,000 in profit. And Alan cleverly also lived in the unit for a little over a year, so that money is all tax-free. And last, we'll take a look at Andrea. Andrea purchased a unit through one of our real estate purchasing philosophies called real estate arbitrage. Basically, this is bargain hunting in pre-construction. She bought the best value unit available to her in the platinum phase. We took a look at a multitude of different options, and we deemed that this was the best deal, value packed on a basis of numerous amounts of metrics: price per square foot, exposure, etc. She purchased on June 17th, 2017, and she purchased the unit for $516,000 on the second day of platinum access, so basically the second day of sales for the project. 1 week later, when the project went from platinum into that VIP phase, the developer repriced all the units, and Andrea's unit, a mirror image of it, was selling for $590,000. You take a look at this in very simple terms, that's $10,000 a day of profit. Andrea made over $70,000 in that first week, and the numbers go up from there, obviously, as well. Next, Jackie will take a look at some of the benefits and introduce 128 King Street to you as an investment property.
Thank you, Alex. So I think the case studies that we've just heard are super exciting, and that's why we are so excited to talk to you today about 128 King Street North. Why is this a great investment? I mean, number one, location. Waterloo is close to both Laurier University and University of Waterloo, but also home to some of the top-rated universities and one of Ontario's top colleges. It's an urban area. It's surrounded by over 500 tech companies, including some very, very big names: RIM, Google, IBM, and more. Exceptionally low vacancy rate. So this September, we've noted less than 1%, 0.07. And the units are just a tremendous, terrific size. They're very livable and they're very rentable. The job growth in this market is extraordinary. So it is one of the highest job growth markets in North America. Again, going back to some of those major companies that have invested in that market. IBM, head offices for Manulife, for Sleeman's Brewery, for Sun Life Financial. It's a huge growth neighborhood. Again, the pricing and the platinum access that we can give you guys, so anyone coming into this project wanting to learn more gets in first, gets in early, and gets access to great suites. Turnkey management, so something we really haven't spoken too much about, but one of the services offered by the Property Club is our concierge services, and one of those being the ability to manage your property for you. So lots and lots of different things we can do to help facilitate a seamless transaction. Again, Happy to fill you guys in more. Take a look at our website. We walk through our concierge services then. 128 King Street North, Uptown Waterloo. Again, unbelievable vacancy rates and an average rental monthly of $1,200. So let's walk everybody through the investor scorecard, Alex.
Sure. So when we take a look at any property, we evaluate on four metrics. The first being location, obviously with real estate, location, location, location. 128 lands itself between two major universities, being Laurier and Waterloo University. It's also smack dab in the tech hub of Waterloo Kitchener. Next, the price per square foot. So $647 is the average price per square foot of the competition for this development. Local pre-construction is selling at that price point, and what we're really looking at as a projection is 128 will be going at approximately $540 a square foot. So this alludes back to one of the case studies where Andrea purchased a unit well below market value on a price per square foot basis. We're really projecting that that similar situation will play out here, where you could make a purchase and immediately gain a $100 price per square foot value. Following that, we take a look at the walk score. So a walk score is always extremely important. The general census is that the province of Ontario is pushing against cars, so there's less and less parking that's becoming available. That being said, the 128 North building will have a 94 out of 100 walk score, which effectively means you can do all daily, weekly tasks on foot. And lastly, we tie all this together with a score for the building. A AAA rating here really means that it's one of the most blue chip properties you could purchase. A couple of the reasons why that we haven't mentioned: it's a high growth area, both for employment, lots of construction occurring in the area. The property is below market value, and there are excellent opportunities for the region to grow as a whole as new transit connects it to the Toronto, its major sister city. Next, Jackie will take a quick dive through some of the neighborhood gems that Sue has prepared for us.
Yeah, thank you, Alex. So Susan Legg has done a deep dive into this neighborhood, and it's a winner. I mean, Alex spoke to this being a AAA location. Let me give you some more information. Over 3,000 acres of parks and 6 conservation areas, 22 golf courses. There's a local international airport. Pending traffic, it's just about a 1-hour drive to downtown Toronto. Great neighborhood gems like the St. Jacobs Farmers Market, well renowned in southwestern Ontario. Some unbelievably great restaurants. Again, highly walkable. Comparative salaries and wages to cities such as Ontario, Ottawa and Toronto. And overall, inexpensive housing. So a great place to live, a great place to settle down, a tremendous place to invest, considering all the major companies that are investing and have head offices in the Waterloo neighborhood. So that's the conclusion of our presentation today specific to 128. We want to thank you. Why did you join the Property Club? Why should you join the Property Club? Because we can get you in early. Because we do some extra work, we want to give you an insight. So we're going to qualify sites as we bring them to you. We're going to be able to give you more details than are currently out in the market, specific to investor information and data, and really comprehensive neighborhood overviews. We'll rate the neighborhoods for you. We're going to look at trends. We're going to look at comparables. And we're expert here, guys. We've done this themselves. We're all investors. Collectively, between this group, we have over 100 years in real estate experience. Thank you for joining us today. We were happy to walk you through this tremendous investment opportunity. There's a couple more coming, so next webinars we'll be doing 859 West, Universal City, and the Way, so please stay tuned. I think I'd like to close by saying we're excited to present this to you today. Any questions, any more questions at all, please reach out to us directly. Alex is certainly available. You can reach him at sales@thepropertyclub.ca. Thank you for your time, and again, any questions, don't hesitate to reach out.